folks. Chime in. Don't just write comments that I'm bald. I know I'm bald. Like, I see those comments, guys. I see them. It hurts my feelings.
And by the way, I know I'm old too. Yes,
Yeah,
I know.
I'm
I'm
bald.
not old. I'm wise and experienced.
Founder and CEO of More Insights and Strategy, Patrick Moorhead.
6, 5.
CEO of the Futurum Group,
Daniel Newman.
6, 5.
Do we know what we're talking about, Moorhead?
We absolutely know what we're talking about.
I do love that intro. I
do
want
too.
Dan.
What I love the best part is seeing Plump Dan with Bill.
Fat Dan. So bad. I don't know.
I mean, I'm just jealous. I mean, you got a 12
It's a reminder. It sets you back in time to realize that even when I was fat, I still got to talk to some really cool CEOs. All right, everybody, welcome to episode 309. We are back. I'll let you in on a little secret. We may actually be doing this completely by ourselves today. So, the editing will probably cover a lot of mistakes that Pat makes as the operator, but this takes us back. Remember the old days, like you and I just getting on and recording and just putting out whatever we record. We'd even live stream it. We didn't care. Production quality be damned, whatever.
Yeah, no, it was fun. I mean, I do like where the show is now, but it just shows just how much you can get done without a support staff. And I think, we're always pushing the limits, and even our team is, using AI to kind of help figure out what we should talk about.
Yeah. So you're going to play around with all these like media things and, because you're going to play operator today and see like if we could actually have just pulled this off almost completely on our own and have it like ready to go. I always like to see how many things I can do, I always tell the story about my dad, trucking company.
Yeah.
He knew how to drive the trucks, fix the trucks, load the trucks, sell the trucks, so I guess it's our job as the founders of our businesses to know how to do all this stuff, and all this AI is, it's pretty cool. It's pretty fun. Anyways,
yeah, Daniel, I remind my team a lot that when it was N equals 1, and I think in total, right, including contractors, about 30 resources, right, 25, 30. And I used to do everything myself, everything, right?
Yeah, I love always knowing. I call it putting hands on the wheel. Like,
Yeah.
I understand we've entered the era of autonomy, but I like that I know how to drive the car.
Mhm.
Let's put it that way. So, but anyways, everyone, 309, heck, it's funny because you get to like the top, you get to like 300 and you're like, whoa, we're there. And it feels like months go by before you get, so it takes a long time to get 100 to 100, but 309 times you and I have gotten on and delivered. And today's actually a national holiday. You and I are, I don't know. I don't know how many days I actually take off in a year, but this is fun. Anyway, this is all fun, but there was so much going on this week. I think both you and I are like, we have to get this in. Even if nothing else happens today, we got to get this in. The audience, 100,000 plus subscribers, are waiting to hear what we saw this week. We were on the road. It was a busy week. It was a busy week in the markets more broadly, but we had multiple days at HPE Discover. We were over at Everpure, Accelerate, Pure Storage, for those that have not completely connected those dots yet. Databricks had an event that, a number of our team was at. And then, of course, the markets didn't let us down. Apple Intel news blowing up with press requests and quotes that you couldn't do. But hey, at least it's good to know you're loved, right? You're like popular. Everyone wants to talk to you. But yeah, so we, you know how the show goes, but for any new listeners, Pat and I kicked this off with the Decode. The Decode is the part where we break down kind of the news or the events that we attended. It's a little bit of the deep dive. And then we head into this flip. The flip is our simulated debate. And it's basically me owning Pat for 3 to 5 minutes every single week. He thinks it's the opposite. And that's what he says when he gets to be the host. But he isn't the host today. I'm doing the host show. And then we will go into bulls and bears, and we will talk about the news in the market. That might be earnings, that might be investor days, that might be Fed stuff. And we try to deliver some thoughts for the common folk, right? We're not here to squiggle on charts. We're just giving our big, broad, bold views.
What are you talking about, man? You're boring me. Will you hurry up?
No. Put your freaking Carrageenan down. carrageenan. Everyone, I recommend you read the ingredients on that core power. 42 grams of carrageenan. But those things do taste great. They're legit milkshakes. By the way, I just want to tell you, Pat, we bought the two while we were there. I took one of them home because I didn't get through it, and it's sad because it's been in my bag for like 4 or 5 days, not in a refrigerator. And I can open that thing up and drink it.
Totally. Yeah. By the way, I did the same thing. But what put a big smile on my face is that my wife came home. Well, I came home from work, and there were 2 cases of strawberry, and I first thought it was Pico, but it was my wife, and that put a huge smile on my face. She's
You're
in.
chugging
I'm in.
42-gram core powers now.
Yeah. Yeah, we got
Nice.
the trifecta. Pico likes vanilla, even though he moves out quick. But I prefer chocolate.
You're a chocolate guy.
Yeah.
I've always heard that about you. All right. So, Pat, a lot to cover. Let's go into the decode. You're really good at this.
Right?
I've got a second job for you. I think you
Buddy,
can.
I will put it in the contract going forward. So
Yes.
yeah.
Deals and dealios. They will write songs about us, Moorhead. All right, let's hit the first topic. It kind of happened right into last week, into this week. So by now it probably feels like you've heard a ton about this, but we haven't had the chance to break it down. But last week on Friday in the afternoon, right before we crashed out for our weekends, US government forced Anthropic to disable Claude Fable 5 and Mythos 5 worldwide. What happened there?
Listen, this is really unprecedented. And, 90-minute compliance window and a worldwide kill switch, right? Again, I don't know who we should believe, right? I mean, I'm kind of reading what's coming semi-directly out of the White House. You've got, the Lutnick letter, you've got, Verge coverage, Axios coverage. But I think the important part is kind of what it means at this point, right? Essentially, model access is now a geopolitical variable. And so everybody needs to plan for portability. So if you're in the US, this completely makes the case for on-prem infrastructure with models on-prem, because it's not just the models that got disconnected. It was also the hyperscalers that deliver it, right? And you can imagine, kind of where this goes. So, if you're a CIO, you have to really be on your toes to figure out where this go. And it's so funny. The irony here is that Dario spent the last couple years telling people how dangerous AI is and how dangerous his AI is, and then Mythos came out, and sure enough, he got the rumor mill said it was AWS that found the exploit, but I've seen NSA saying they found exploits, so I don't think this is what it's all about. One of the surprises was that cybersecurity people came out and essentially said the shutdown was dangerous because Mythos 5 on playing defense was a way to deal with people who were using models on offense. But net, I think this enters a different realm of export control and also security measures as dictated by the governments. We've been dealing with export control on silicon and infrastructure, but now we have to deal with it on models and capabilities. I think this is going to be the gift that keeps on giving from a topic point of view, Daniel. Supposedly, Anthropic has issued the, what it takes to, make it a lot harder to jailbreak, and, we will see.
Yeah, I think you hit it on the head. Spend a month scaring the crap out of everybody as a PR tactic. It's interesting, kind of. I don't know the character he plays, in this whole era, but like, Dario's been banging the regulatory drum, banging the sovereign wealth and investment into the platform fund. And I don't know if that's a too big to fail goal, that he has to make AI, you know, larger than life. He's moved so much private market cap to public market cap to private valuation through basically ending consulting, ending
Yeah.
SaaS, ending, and so what I will say is I didn't get to play with it enough to really be able to determine how good it is. Those that really were banging on it though seem to think it was pretty darn great. I am excited to hopefully see it come back. But it also, to your point, just goes to show that the government can put their thumb on this thing. And remember, it was actually really about not letting foreign
Yes.
adversaries but the problem is because I remember reading something that like Carpathy couldn't use it anymore because he's not a U.S. citizen. So technically, like U.S. citizens could have continued using it under the initial order. But having said that,
That's a
they
great
didn't know.
point, Daniel. I'm glad you added that in. It was really
Yeah,
Anthropic's decision to do that. Now they would have to put in show your ID, show your passport, take a picture. They could have used Clear ID to do that. But how the heck are you going to authenticate yourself every single time that you go in,
it
right?
would have been hard, and especially on that timeline.
Yeah.
But I did think that maybe they would add that authentication back to get more people up and using it. I'm excited to see it come back. I want to use it. So it'll be interesting to watch. It's definitely, the model war is on. It does create some concerns about, these business models. If the
Totally.
best models that people could pay for could just be rug pulled on them, does that hurt revenue? And that's something to watch. So, all right, Pat, we spent 2 days, almost three, in Las Vegas, bouncing between HPE Discover and Everpure Accelerate. A lot of time in HPE. 6.5 was there, by the way. We were, we crushed a bunch of interviews, live streamed. I think we had like 30,000+ people watching, which is awesome.
It was cool. And the cool part is that the volume went up over time, which
Yeah,
I don't know exactly why that would be the case, but people hung in there, right? I
yeah.
think at the very end, I think was 10K in our final interview, watching live.
Just that many live. It's awesome. But yeah, I mean, we brought some obviously big hitters, CEO and multiple presidents all on the platform. And of course, it wasn't just you and me, it was our great teams, you know, riffing and discussing all the announcements. So, look, I'm going to start at a high level and I'll leave some oxygen for you to talk. HPE has been very focused on addressing their customer base and their investor base differently than the other OEMs. I think there was a very conscious decision that their technology is good, but their ability to compete at scale, chasing neoclouds and tier 1, 2 data center deals, was not how they were going to approach it. And they were going to take this network Juniper acquisition with their existing network and Aruba portfolio, their security portfolio, their software portfolio, and they were going to couple it with their compute, their NVIDIA partnerships, to take a different modality to get to growth. And in the last quarter, and we talked about this already in the pod, that showed up as they, got to 6 quarters ahead guidance, 2-year pull forward on earnings, paying down their debt. All those things are looking really good. So a lot of what was announced here really kind of stayed in that realm. They stayed focused on network and security led compute deployment for enterprise and sovereign. And that was expanding partnerships with NVIDIA. It was what they're doing with Marvis, the sort of autonomous networking technologies that they focused in on. So that was, they again deepened their big partnership. And probably one of the most interesting things is just they now have gotten themselves access to the hyperscalers through a partnership with AMD. And we had AMD CIO on the show, but with the Juniper finding its way into the Helios bomb, they kind of took a different route to getting into these hyperscale deals because we know AMD has gigawatt commitments from OpenAI, from Meta, And I think the market, at least if you look at AMD's share price, overwhelmingly believes Helios is set to be a success. So I think they stayed the course, and it showed up in the results. And I think they're playing the right game, which is not trying to necessarily compete with a Dell or a Supermicro on volume and price. I think they're trying to keep margins high, focus on enterprise sovereign, and win where they have competitive advantages.
I would say categorically that HP has the most complete agentic story it's ever told, right? And we can do the comparisons, and I've got my analysts doing comparisons across Cisco and folks like Dell, and I think when you look at, well, what is a full stack, right? They've got compute, they led with networking, they have storage, they have data, and then they have a full software stack, including virtualization and containers all the way up, and using AI for managing that control plane. A lot of folks are doing it. We saw Cisco at Cisco Live. They're doing it. Dell is instituting some of these as well. So it looks like the networking is paying off for them, and at least so far, right? Particularly scale out and scale across, and even across some of their Cray scale up. A lot of capabilities there. They're also integrated into the AMD stack, right? The Helios switch is HPE. That is super super interesting. But it's not, they're using NVIDIA silicon, they're using Broadcom silicon as well. So, a lot of different chips being used there. So one of the things that I've got to do a little bit more research on is, how is their software stack doing? Right. The Esmeralda, I got, feedback, or at least the way they were leaning it into it on, this essentially the one touch ability to, get out of a VMware and into an HP virtualized environment is going well. But we didn't see a lot of customers where they led with software on stage. There was mostly the discussion was on the infrastructure, but that's kind of a go-do that I need to go. I am glad to see that the markets are finally seeing the value that the company brings. And a value play works as long as it works, and volume guys will always be trying to add services. And in this age of agentic AI, I think you're gonna have a lot of people building a lot more software who didn't do software before, right? I'm expecting Dell to do a lot more of their own software, and I think at Cisco Live we saw that with Cloud Control.
And while we were there for HPE, we were bouncing back and forth across town, and we hit Everpure. But you want to talk a little bit about there, because they announced some pretty novel new things that definitely is shifting Pure Storage to its Everpure, directionally to its Everpure promise.
Yeah, so a lot of good announcement there, but what I really want to lean into is this idea of data primacy. You and I had the chance to do a 2-on-1 with Charlie, and kind of talk this through. And to me, the value proposition is very strong. Okay, and essentially the ability to leverage the one-touch acquisition, and to have a layer of intelligence that you can tap into around the enterprise, that's not hard coded into your enterprise app, and it's not hard coded even into your storage array. Meaning, this can even operate on NetApp or Dell storage systems. It works across Salesforce. It works across SAP. Workday, insert your own enterprise app. So today, right, when you're doing an enterprise workflow, you're burning tokens with the SaaS provider. Okay, you're also burning tokens to orchestrate and move and pull data from different places. It's very expensive, and it's so funny. Even though I'm not a huge enterprise, I get hit with that on even using Perplexity Computer. And sometimes,
Yeah.
my developer son is like, "Why are you doing? Like, why are you? That's so expensive in the way that you do that." So it kind of
Yeah.
speaks to me
He
on
just
the
wants,
micro. Yeah.
Hermes, DGX box, right? He wants you to just bring up, he's nerding out with you.
Well, it's more like, you needed a feather, right? And you used a hammer, right? On this type of thing. So I love the concept. And, the big challenge for Everpure is to, first of all, convince people that they're in the same conversation as a Databricks and a Snowflake, right? Even though there's a lot of people who are claiming that they can do that. But I'm an ex-product marketeer. Maybe I'll always be one in my brain. It always starts with the core value prop, and the core value prop is good. It's valuable. I don't know necessarily if it's unique. I think it is definitely unique across storage players in that you don't have to use their storage array, and it's also very unique even compared to Snowflake and Databricks. So good start.
Yeah, I mean, my read on it is they are confident in the flash existing storage business. There's the demand is there, the growth is there. They've had to deal with some pricing, but the entire industry is dealing with that right now. But growth is going to come from being part of this sort of neo data storage layer that has created some unicorns and the DDNs and Basts in the market. It'll be in terms of being seen maybe in the same vein as a Databricks or Snowflake in some ways, in terms of the excitement around the product. And they're not trying to be that per se, but what they are trying to basically say is, look, we can make all your data more accessible, more in your control, more within your governance, more within your sort of your data corpus for utilization that's going to provide a greater level, to your point, Pat, of efficiency. And so this is, by the way, a huge lift for them to prove that they're the right partner for this. Like,
Yeah.
I in my conversations with them, and you might have witnessed some of them, is I was really pushing that thread of like, you need to earn, you have clearly the customer base, but this is a different buyer.
Yeah.
And you need to prove that you have the permission to compete in this space against these companies that have already come out, the companies that already have a kind of a bigger data sort of story, the ones I mentioned, some of these startups. And then, of course, that you truly create ROI and value on generating more efficient tokens. Because again, there's a lot of work with MCP and API being done that people argue is very efficient. You can actually just deprecate a lot of your tools and apps and just reference the data. And so I think there's a lot of proof that has to be done, but I think it's a good opportunity. All right, let's hit the next one, Pat. I'm gonna start this one off, but I'm gonna give you some of the ball because this is really your wheelhouse as a PC guy.
Stop that. And this is kind of this is the kind of triple header here. And that was good, Daniel.
Yeah, thank you. So Apple is obviously, there's been a lot of talk about what they're doing with, DDR, memory, how they're handling supply chain, how they're handling wafer. I mean, they've really never been in this position before. They've always been the biggest. They've always had the most capacity. They've always had the best supply chain. This was kind of the thing that Tim Cook was actually best at, right? He certainly isn't great, although he's better than Evan Spiegel at designing products. I'll give him that. Overall, this was interesting. And then this week, Apple's going to make chips with Intel. And I mean, talk about pumping your stock, pumping your portfolio. I mean, my God. And I think Apple went up like 10%, Intel went up 10% instantaneously. Now it's only trading at like 150 multiple. But the market is clearly bracing for Intel taking on at least some portion of Apple's chips. Um, as a whole, I talked to a few media, probably less than you, but my kind of quick read on it is that this could happen in the next 12 to 18 months. This is going to be based on this new 18AP. We do think it could be logic, where a lot of people were wondering it would just be a packaging deal or whatnot. M7 SoC on 18AP, MacBook Air, and certain. I think Apple is going to de-risk some lower end parts. That's kind of the conclusion that our team came with. I won't take all the credit. I asked some of the folks that spend more time on this PC stuff. I'm just not a PC guy, or a Mac guy as much. But what's really interesting here, though, is how this sets Intel up for 14A. And you've been really one of the more outspoken on 14A, being the inflection, efficient backside, smaller device profile, built for the iPhone. Because this is when it gets really interesting, is when it starts to be volume on the iPhone. And there's a belief that in 28, assuming 14A gets through risk and gets to scale production, that could be really interesting. So my last read is, I think Apple's going to be measured about this. I don't necessarily know that they're doing this completely willfully. Anyone that knows the history knows that, there was a big breakup not that long ago. But I do think that necessity is the mother of all invention. And right now, there's just not enough TSMC to go around. And that's also why, by the way, we're hearing more about Samsung Logic deals. This is just where there's capacity, there's buyers right now. So I'm sure you got a lot to add to that.
Yeah, Daniel. I mean, you got a lot of rocket ships in there you can use. So yeah, I'm going to stick to the kind of the Intel stuff here. But on the macro side, we need more compute and we need it now. TSMC is underinvesting, and I think there's also a good case to say that Intel packaging is better than TSMC. Big volumes won't be this year. Next year, it'll really be in 2028 for Foundry. But I do think that there's there's an LOI signed between Apple and Intel, and I don't know if the announcement galvanized that, meaning it's YOLO and it's going to happen regardless. But in the end, it's always about performance, right? You've got to hit certain metrics. And I do think there is a decent, well, first of all, anybody who thought this was an Apple packaging deal is a fool, because Apple's packaging is not that advanced and it's still monolithic design. I mean, it does need good packaging, but it's basically a monolithic die. If you go to the very highest end, it's two wafers glued together in a not that sophisticated package. So this is definitely going to be wafer that they would be doing. And out of the other side of my mouth, I'll say it could be the ASIC as well. 18AP is a good glide path for something that's potentially a previous design that Apple had, right? Because you got a lower risk, and you got to test the tire, kick the tires here, or actually take a test drive. And 18AP for Apple is the test drive to get to 14A. And what I'm really happy about is how it ended up, right? Higher performance at the same power, and then 18% lower power at the same performance, and 20 to 40% better thermals, ceteris paribus, all things equal. So once a real deal is done and commitments have been made, Intel will have to publicly disclose that, because it would likely be a relevant stock event that people they would need to inform folks about. So very exciting. Listen, it's, even though some people tell me I'm an Intel bear, I mean, I was one of the only analysts who gave even Intel a chance when they were selling below book value at 20. Right now they're at 155. And to me,
Who else gave it a chance.
And you know, I never, by the way, I never Babe Ruthed it. I always said Intel has to do this, this, and this to get to this. And we were always talking about the China and Taiwan threat and national security. So we are
Yeah.
here.
Suggesting that execution is important is not is not a fool's errand for an analyst. You know, like that's something you and I, like, to some extent we were both cheering Intel on and believed that they could be successful, but I think both of us had a cautious optimism against the things you mentioned. But we also, I've actually been surprised that they've gotten credit in advance for so many things that I do expect them to accomplish. But that was sort of, once the deal got done,
Yeah.
I kind of knew that would happen, because all the things that are happening would have not happened at this speed if you didn't have basically a sovereign wealth fund investing in Intel. But all the things still would have happened. I do believe that. All right, one more topic. Elon Musk brilliantly makes a $60 billion acquisition with fake liquidity that was created by a run up of the stock. I'm kidding. I went on TV yesterday and I said, like, it will be a $10 trillion event company eventually. I didn't give a timeline because honestly, it's like it's a $50 billion revenue company that loses money. So it's like, I don't know. But anyways, Cursor, 60 billion. The company's stock was up like half a trillion or more. It was up like almost a trillion, I think, at the top from its initial. Good use of proceeds. What do you think? What do you think of that deal?
Yeah. So xAI so far has been a complete failure outside of what it does on X, which is absolutely brilliant. I spend most of my time on X, but also spend a little time on LinkedIn, little Insta. If I hold my nose and get on TikTok, but its AI tools are fantastic for relevance. Doing a follow up on whether somebody was accurate, but they've been they were late. They were late with thinking models. They were late with tool calling, and now they have to spend a lot of money to buy their way in, as they've got a ton of GPU capacity sitting there that they've sold to Anthropic and Google. And I think it's interesting, starting with if your killer app is going to be development, that's a super crowded space, right? It's just chock full of Codex and Claude Code and just a bunch of other competitors. You've got Microsoft as well in there as well. So it's a bold move.
It really didn't cost them anything.
Yeah, yeah. I mean, it was funny money, right? Which I get, and they are getting a lot of Fortune 500 customers. They're $4 billion of ARR a year, 7 million monthly active users, and 50% Fortune 500 penetration. This is where the positioning and how the company works is going to come into full view. Enterprises, they want consistency. They don't like rug pulls, and the same mistakes that Anthropic is making with businesses can't happen. Otherwise, I could see the business just going down.
Yeah, I don't use anything from Cursor, nor does our team. But I mean, it was a strong utilization of the momentum around SpaceX to build out further capabilities of its sort of full end-to-end AI stack. Like I said, they kind of bought it with funny money. It was one of probably the best of the independents that was available to the market. And now, again, going back to, what does he do with this? Like, what happens now? Because xAI has basically become PowerShell compute at prices that are well above market. I think it was Google paid 2 or 3 times the typical NeoCloud price that someone would pay CoreWeave for capacity. But remember, Google owns 7% of SpaceX. So landing that deal right ahead of I don't know how objectively you don't look at that as sort of, what would you call it? related parties transaction, like, that huge profitable deal. But again, this was an IPO. Everything was done, I'm sure, by the book, but it's just a fascinating thing to watch. If they're just a neo cloud versus are they truly building like an end-to-end AI stack that people are going to use and consume. But can they come in late and succeed and win? I mean, sure. I guess if they build enough orbital data centers, they can have more capacity than anyone on the planet. Let's just see if they get there. All right. All right. We've gone a little long. We've got to get to the flip, dude. The flip is where, we take a side, we provide our perspective. It's simulated, so it doesn't mean we necessarily agree. And this week on the flip, we are going to debate, are enterprise AI budgets contracting, and is the procurement boom ending and the rationing phase beginning? Let's see who says yes.
All right, this is going to be an easy one, folks. So essentially, and it's important that you understand all the elements of the debate here, right? Yeah, I think when we look at what's going on here, we're going from this token maxing to token efficiency. I may have stolen that from Dan in a meeting we had this week, but I'll give him
One a day.
So we already know where Dan sits, so it's going to be interesting to see how he debates that other side. And essentially, we're getting into a lot smarter implementation. And whether it was Cisco Live, Dell Tech World, HPE Discover, it's very clear in talking to enterprises that they're focusing on less projects. They're getting honed in on the most strategic ones, and the ones that are very difficult to govern, difficult to put security around. And I think what that essentially means is you can optimize your spend around it. And I think Accenture, right? They posted on Thursday. Accenture cut its guide, and bookings declined the same week, right? And it showed that new bookings declined 2%, and they trimmed the 2026 revenue guide 3 to 4%. Forget the fact that their stock got hammered 13%, but I think they're a very good canary in the coal mine of whether enterprises are spending a lot in AI or just talking through that. And I didn't even bring up, right, the Uber blowing through their cloud licenses, Microsoft cutting off developers from Claude Code. These are other proof points along the way. So yeah, I mean, AI cost management is now a venture category, which only happens when bills hit the wall.
Yeah, I mean, listen, this premise, it's a categorical error. What looks like rationing is concentration. Spend isn't shrinking, it's collapsing from hundreds of POCs into handfuls of production deployments. Discipline, it is not necessarily contraction. Dollar counts are growing, project counts are going down, but the bubble bears are reading that fewer logos is less money, and that's wrong. So in the end, the buy side is voting with balance sheets. If enterprise demand were actually rolling over, hyperscalers CapEx guide would start showing to be flat to down. And it's the opposite. It's been underestimated every quarter, whether it's Microsoft, Google, Amazon, Meta deals this week. You don't pour record CapEx into a market you think is about to ration. The people closest to the actual consumption signals are accelerating, not breaking. And what is positive is we're entering what I would call the hard ROI era, and that is bullish, not bearish. The spend getting killed is all the science-based bullshit. It's the spend that we're going to see that survives is going to be bigger, stickier, and tied to the P&L. A CIO cutting a bunch of pilots that are failing and going with 2 high-quality production systems that are driving revenue or driving efficiency into the business, that's where the spend is going to go. This is where the market is moving away from token maxing and garbage, and then maturing into real money. And by the way, the agent wave hasn't even hit the budget yet. Seat-based AI was nothing more than an appetizer. We know there was tons and tons of subsidy that was going on, which basically, meant that the spending was scaling non-linearly. Now that it's actually being tied less to headcount, more to outcome, you're going to see that linear or even exponential curve start to fall into place. So, look, TLDR, the real NRR and seat expansion is telling the truth that this headline misses. Playing offense here versus defense. It's we're going on offense. We're focusing on the big projects where money is to be made. We're not focusing on the nonsense and science projects anymore. And I say good to that, because that was a lot of crap. I created a bunch of it myself. I wasted a whole bunch of money on building a whole bunch of things that added no real value. I built 10 apps. They all had one user. It was me. And even after a few weeks, I hated all of them. But in the end, reallocation is not concentration. What we are doing is we're reallocating to things that make money. This is how it's going to go. We're going to see token rationalization, but we're going to still see massive economic growth from AI and massive increases in spend because of the outcomes it creates.
Yeah. If I look at the premise of the topic, it could actually be both, right?
Yeah. I don't know. That was pretty fun.
Like, I'm sure you have numbers somewhere in your intelligence platform that actually do forecast the amount of enterprise spend.
I sure might.
I was waiting for you to pull that out of the bag and brag up your own book.
You gotta subscribe if you want that goodness. It's gonna cost you.
You need to give
All
people
right.
a taste, though.
I give tastes. I give a little taste. All right, buddy. Good argument. Good try. We both tried hard there. A couple of tryhards. Let us know who won. We did better there, folks. Chime in. Don't just write comments that I'm bald. I know I'm bald. Like, I see those comments, guys. I see them. It hurts my feelings.
And by the way, I know I'm old too. Yes,
Yeah,
I know.
I'm
I'm
bald.
not old. I'm wise, and experienced.
Thoughtful. You're a thoughtful guy. All right, let's wrap this up. Don't have a ton of time because I actually am somehow on this day off and my calendar's jammed. But we're going to talk markets, bulls and bubble bears. So let's start off, Pat. Talk about big in the markets. Our brand new Fed chair, Kevin Warsh, at a meeting. The market was up all day. Absolutely took a wildly vicious shat after he was done with his remarks. But I don't know. I liked it. What do you think?
So first off, new Fed chair, right? And that's a big deal, and a lot of drama kind of getting up here. I kept interest rates the same. It was unanimous, but it was like kind of indicating in the words, like try reading the tea leaves, right? We used to judge what the Fed would do by the size of the portfolio or the amount of paper that they would put in there. And literally people would trade off of that. Now we're talking to words, right? How many words? 344 words to 132. It seems silly, but this is definitely silly. Markets read, all his comments as hawkish, right? S&P fell, 2-year yield jumped 16 basis points or bips for people like Daniel. But I think this is not surprising, giving energy cost the way it is. And one thing that nobody else is talking about is we've deported millions of immigrants out of the country. So, I'm really interested to see if that is empirically an issue. So I think in the end, though, what people are going to get to, it's so funny. I try to watch Kramer on CNBC in the morning, and he did have a very thoughtful thing to say, which was basically, we'll stew on this for 2 days, then we're going to get back to the AI trade.
Yeah. Well, listen, the market kind of hated it, but then the next day it rallied. So, Warsh came out, and he had to come out and be thoughtful about the fact that he was willing to have an independent view, because the Fed's supposed to be independent. The idea of rate increasing is really stressful on the market. It creates stress on the AI trade. It creates stress on the financial services companies. It creates stress on the consumer, right? And all those things can be painful. I just don't see it actually happening in practice. I like that he pointed out that he cannot control the price of individual items. People are like, oh, a loaf of bread's expensive. He's like, we do not have the ability to control the price of a specific item on the shelf. I also like the fact that he's going to get away from these stupid freaking surveys they do that are 3 and 6 months outdated before they hit. So they're making policy decisions on 6-month-old data. They need to get real time. They need to use tools. They need to probably spend some money with Palantir and Databricks and Snowflake and figure out how to get more real time so that their decisions are being made not only on real time, but future leaning insights.
Right.
Like we do with our tech spending intent survey. We're looking 6 months into the future, not 6 months into the past. But I like the guy. He's good change of pace in my opinion. All right, let's talk, quickly. I guess there was a deal made, an MOU that supposedly got signed. And now I'm starting to see sputterings on Twitter that maybe it's already undone. I don't know. So I'm not a Iran, Israel, US policy guy. But what I'll say is oil going below 80 is good. It did momentarily go below 80. Supposedly the Strait of Hormuz was opening up. I don't even know if that's still true this morning. I'm reading some stuff that's saying maybe it's being closed again. God, what a wild time. But clearly the market's willing to look through this because the market has absolutely rallied through this whole Iran conflict. Let's hit the net. Do you want to say anything on that? I don't know. Do you have anything to add there?
Well, Skip, nothing to add.
All right. I guess we're oil guys now. What can I say? One more. This is one you follow more closely. You mentioned earlier, Accenture, the whole service provider space. They beat on earnings. They missed on revenue, but had a bookings decline. And the market just absolutely took them behind the woodshed and just whooped their ass. What's going on there?
No, I mean, you basically said everything I was going to say. But I think this is a canary in the coal mine. You put this up against the enterprise SaaS stocks, right? Which is there is a thesis that agentic AI and tech vendors actually chew into this. And when you have as many hundreds and thousands of employees that that Accenture has, and the entire discussion about white collar worker displacement, this is why the market is reacting to that the way it was. So, yeah, I mean, single worst day reaction in years that it's had. And what's interesting is people were reading it as an AI spending decline. I kind of use that as my fodder in the flip, even though I don't necessarily buy into this. I think at the end of the day, what we're going to find is enterprise spending is not down. It's just down with Accenture. And we're going to have to see what the other GSIs come up with.
Yeah, I've got this whole forward deployed premise for all the businesses like this. This is really how I run Futurum, a much smaller number of people being powered by and augmented by much more technology. And there's a problem fundamentally with a business like Accenture's. It just is. There's so many bodies to do the things that, like, again, the people at the front end that have tons of expertise and can go into the room and really help, those people are going to be valuable for the long, but those people that are just gophering and doing the back end and creating the decks, like, you can see where that's going to start to not be as necessary. Man, I create some amazingly good decks with Claude Code or different tools. I mean, you and I are kicking things around, like creating board level decks that had incredible data just based on an API and an MCP. And anyways, and by the way, I just want to give a shout out to my ETR team. They called this Accenture in our data, and actually a bunch of customers got saved by having by having the ability to see this ahead of time. All right. Just a quick one. We'll run on this one, but what a week for SpaceX. Crazy, right? It IPO'd, went from, I think a moment it passed Microsoft's valuation. It passed Amazon, it passed Microsoft, and then it sort of went back down by the end of the week. I think, I don't know if you can pull it up, but I think it closed 181. So it came out at 135, ran all the way up to 210, then all the way back down to 181, but still up 23% since the initial IPO. Look, this one's going to be volatile. I think there's a very realistic chance it will trade at some point in the coming months below its IPO price. I think the lockups are going to end. But this one's really interesting because look, there's a 3, 4, 5x Musk factor on this one, because the business itself, like, you cannot rationally or fundamentally justify this thing being worth more than Microsoft, more than Amazon, more than Meta, more than Broadcom, more than TSM's. Like, it's like sub 50 billion in revenue with loss. It's loss making. By the way, thinking that does not mean you do not think this is an awesome company that has a great future. It just, like anything, the valuation should come when at least some level of fundamentals to support that, even if you put a high founder multiple on it.
Yeah, good words. I mean, the fact that I got up to the valuation of Amazon was it's laughable now. I mean, in the future, when we're transporting people to their condos on the moon, and doing interplanetary travel can be completely different. Heck, if they could be the number 3 for coding tools, that would be a huge jump as well. Listen, I'm waiting for it to get back down to 135. I'm probably gonna pick up some, maybe when it hovers there. You also got to look at the lockout period as well. Good opportunity to snatch something up. Listen, I remember when people were laughing at Amazon. Amazon didn't make any money for 5 or 6 years, right? And it got valuation close to Walmart, and everybody's like, "You got to be kidding me! That's ridiculous." And then Tesla, same story, right? With the amount of cash it put off and where it ended up. So I think average retail buyer is break even at this point at its stock price. So it can only go down. I think people are going to lose a lot of money, and once they start see it declining, I think retail is going to crash this stock.
Yeah, I think it's, again, if you're long-term minded, it's fine to own it. Just know that there could be some serious volatility. I saw it in the options chains because I traded some options on it, and I'm committed to buy a whole lot of it in 2028 if it goes below $45.
Yeah.
I'd love to own it. I don't want to own it here. I want to see some more proof first. There you have it. All right, man. You and I, host, operator, delivery,
Yeah. Look at that.
crushing it for the people. Thanks so much for tuning in. Subscribe, be part of our community. Let us know something other than we're old and bald. We love to hear from our people. And we'll see you all. Are we going to do this next week? We're going to do this next week. We'll do this next week.
We are.
See you next week.